Alcon is a Swiss-listed, but mainly US-focused ophthalmology group that operates in the contact lens and surgical eye care spaces. I'm going to take you through the investment case as I see it, and that's how we're going to cover what the company does, the market share, the growth prospects, and a little bit on the valuation. Just keep in mind that the lens with which I'm viewing this presentation is from a quality growth outlook. What that means, two things, is that there are attributes that I look for in shares, and that's typically on the quality side, the returns that they generate, returns on invested capital. Bearing in mind that the job of management is to allocate capital, so it's our job as investors to assess how well they're doing that. That's the quality side, the attributes, and the understanding that those attributes, if I've assessed them correctly, being a good return on capital, lead to outcomes, and those outcomes are typically higher growth than their peers, and with that rewarded by a higher multiple in the market. And you'll see, or hopefully you'll see, in the case of Alcon, that many of those attributes, like a moat and free cash flow generation, and patents and other things that protect a revenue stream, I find present in Alcon. And afterwards, I'd be very keen to hear feedback and questions. So please contact me regarding the investment case if you have anything to share. First of all, in the investment case, as I said, Alcon is it's a market leader, and they operate in two segments: surgical and vision care. Surgical is focused on basically the care of the eye. And that involves everything from cataract surgery to the insertion of lenses to correct vision. And you can just think anything generally related to the health of the eye and for its ability to see. The vision care segment is contact lenses, and there they compete with Bausch and Lomb and with Johnson & Johnson predominantly. I find both vision care and surgical attractive, but particularly surgical, where they have a razor blade model, which I'm going to go into more detail. I believe that they've got a wide moat. I think that they have an installed base in their surgical division, which I find very attractive amongst hospitals and eye clinics around the world. The brand leader there in I've said here, PanOptix and Vivity. These are both basically types of lenses, intraocular lenses that are primarily used in cataract surgery to replace the eye's natural lens. And that moat gives them pricing power over that portion, that premium portion of their product. I think on the contact lens side, their leadership is more based on their value proposition, which is based on comfort and cost efficiency that the retail market values for contact lenses, but I'll go into that a bit. There are two things that are going to happen in this investment case that I feel are undervalued by the market, and that is the profitability is set to increase quite a bit. And I'll go into why I believe that's going to happen. And secondly, I think that as a function of the profitability increasing and requiring less capital to do so, that ROIC and return on capital employed, depending on which one you'd like to use, is set to rise. So I say here that the capital intensity of the business is low, and with the increased profitability comes higher returns on invested capital, which supports higher multiples. I also believe that Alcon is an acquirer, and they will be able to augment their revenue growth with opportunities in the market to increase their franchise in both surgical and in vision care. So just a little bit on the company. It's the largest eye care device company in the world, domiciled in Switzerland, dual listed, also in New York, operate in just about every country in the world. They used to be inside Novartis until they were spun out in 2019. And since then, they did have the let's say, the COVID pandemic to deal with, but they've been on a journey now to be, an independent company, and I believe that they're doing very well on that journey. As I said, the two businesses are surgical and vision care. Just to add some numbers there, surgical is 56% of the total, and vision care is 44% of the total. And then again, just at the bottom there, I say that there have been bolt-on acquisitions that have, I believe, extended the leadership that Alcon has in the eye care space. What is surgical? Surgical really revolves around treatments for cataracts and other diseases of the eye, such as glaucoma. These are typically diseases that happen with an aging society. So those of you that are interested in sort of a demographical change and the effect it has on vision, there's definitely a tailwind there for the surgical business of Alcon. And here, what Alcon really offers is an entire kit, let's say, equipment, consumables, and the actual raw material in order to heal and treat diseases of the eye, like the ones I just mentioned. And here the razor blade model comes into play because you notice the consumables is a big part of the revenue stream there. So you bundle, the piece of equipment you sell to the doctor or to the clinic, and then to use that piece of equipment you require all of the consumables around it. And since it is a high ticket item, the decision to use that surgical device comes with the understanding that you will then have to pay for the consumables, and then that leads to a total cost of ownership that works for a hospital in terms of patient outcomes and downtime for the surgical room and surgical resources like the doctors and nurses. So yeah, implantables, equipment, and consumables. I think a razor blade model. It's always important for me to understand the flow of money in an investment case. And so who pays is quite important. The decision makers are eye surgeons on the one hand, and the procurement departments of hospitals on the other hand. And what are they looking for here? Predictable clinical outcomes. So it needs to work. And secondly, efficiency. So can I do 3 surgeries a day? Can I do 5? That's really important. So that throughput that you can achieve is an important aspect that both the surgeon and the procurement team of a hospital will want to see. And then obviously the total procurement cost is a consideration, as is the total cost of ownership, including the various consumables that you also need to buy. Alcon commands premium pricing here. It's worth mentioning, and that's also because a lot of their R&D dollars have been focused on this space, and that allows them to say, based on client referrals and from outcomes, that they have the best product out there, and that the Johnson & Johnson equipment that also tackles the same diseases of the eye, it would be a secondary solution to what Alcon can offer. Vision care, they offer contact lenses, and those have various names. I've put a few of them there. Those of you that wear contact lenses know there are many different types. There are ones that you can wear daily. There are ones that you wear monthly. There are ones that deal with astigmatism of the eye. There are ones that deal with patients that have dry eyes. So it's quite a broad segment, and each player in that space differentiates themselves based on the technology they bring to bear. Alcon has quite a broad suite of products there, and is seen as a leader in the space. They've also got ocular health products in vision care. These think eye drops and the cleaning solutions that come with contact lenses, and all types of things that again deal with the health of the eye. Although the two divisions operate very differently, one is more B2C and one is B2B. I think the vision care and surgical, what I like about it is it really means it shows the focus that Alcon has on the eye care space, and focus is something that I value in the companies that I invest in. Again, the decision makers on who pays in vision care, it's retail customers. So you're really on a B2C branding journey there. And the value proposition is really cost and comfort. And Alcon has a long history there of providing both of those and offering a good value proposition, which leads to them being a market leader. The revenue and EBIT for surgical and vision care is shown in the slide in front of you. This is for 2024. Alcon is roughly a $10 billion revenue company, and its EBIT is around $2.5 billion. I mentioned early on in the presentation that one of the things that a quality growth investor is looking for is indeed growth. It doesn't have to be astonishingly high growth, but growth ahead of inflation and ahead of its cost is important on the one hand. And then secondly, as an investor, you can either decide whether you pay for growth or if you decide you don't pay for growth. And as a quality growth investor, I set my sights on being able to price growth and say that I believe that I can pay for a certain amount of growth in an investment case, and that can be part of the value that I then achieve from the investment that I make. And here, what I've done is I've used the total addressable market as as Alcon defines it, split that up into the various different areas that I could get details on, and just try to understand how quickly those are going to grow, taking into account population growth and spend on healthcare in general. And on population growth, there you really also have that sort of tailwind I mentioned earlier, which is an aging society has higher incidences of eye-related illnesses, not to mention diabetes and other sort of more lifestyle-related diseases also play a role there. Where I arrived at is sort of mid-single digits, and then the call is once you've made the call on what the market's going to grow at, you need to understand whether the company that you're looking at, in this case Alcon, whether I believe they will be a market share gainer or ceder. And if I believe they're a market share gainer, then I believe there's a top line growth algorithm there of higher than mid-single digits, so somewhere around, let's say 7 to 10 should be what I can believe a company that is gaining market share should be able to grow at if their market is growing at mid-single digits. Once I've looked at that, I need to test whether that thesis is actually true, and what do I base that thesis on? And I base it on what Alcon has achieved since their spin out, which is a growth of their market share from 11.7% to 13.5%. And that's sort of the vision care market globally. And that is, leading to a market share of 13.5 on their own 35 billion TAM. They believe their market share is close to 28%. So yeah, tough to verify the first one, the 28%. But what I could do is show that their share of the overall pie globally relating to ocular the ocular care market or vision care market is growing. The next is also to look at what their peers have grown at, look at the share of their peers. So here I've got Johnson & Johnson, Alcon, or the vision part of Johnson & Johnson. There's also a pharmaceutical part of Johnson & Johnson. Cooper Vision, Bausch & Lomb, and Carl Zeiss Meditech. And there's also a smaller player in there called RxSight, which really has a really one product. Just interesting to put in there to understand the gross margins they can achieve when you have a great product. And as you can see there, it's 71%. But just looking at the peers, let's just zoom in